Hi everyone, welcome back. This is Ryan, and today I wanted to talk a little bit about market psychology because often on this channel, what we're doing is we're analyzing the market structure, lower, medium, higher time frame stuff. But ultimately, what's going to make you a successful trader, investor, or even just in life, to be fair, I think it's all psychological and how you deal with situations at different times. So I'm going to go through the emotions in the market, profit taking, risk management, and herd mentality because I think these are the main things that come into play when trying to navigate the markets. How are you feeling at different points in the chart? How are you feeling down here? How are you feeling up here? And how is your decision making changing at that point? Because ideally we want our decision making to be exactly the same, unemotional, but often in human psychology, emotions play a big part, and greed and fear can play a big role. So I'll delve into a couple of these subheadings here, and we'll get into it right now. I think a good place to start would be emotions, because when you're new and entering the market at different times, you're going to be feeling different things, and you're not going to have any experience in the market, and it's easy to get dragged into sort of the hype or the fear. So you are going to feel different emotions when you're getting into the market for the first time. For example, if you was getting into the market up here for Bitcoin when it was really hyped, this was a great mania phase. You're going to have had to endure a lot of down, even a bit of euphoria, and down again. I think this is when most of the people got into the market, especially from this recent cycle. So you're going to have experienced quite a lot of things. And one good thing that you can do is keep like an emotional logbook, because by keeping an emotional logbook, you can track how you was feeling at certain points in the market, and maybe even have a bit of a scale of 1 to 10 of how good you're feeling and how bad you're feeling. And often when you're feeling a 10, great, really great, it'll be a good time to maybe take some profit. And when you're feeling down, it's a number 1, really bad, it would normally be a great time to accumulate. So I would advise to do that. But for my own personal story, I'll give you an example. I got into the market down here late 2020, and my first purchase was Ethereum and XRP, them two cryptocurrencies. So Ethereum, I think at that time was around $600, $700. XRP was around 15 cents, something like that, because the lawsuit had been announced. And that really set the precedent for me of how I was going to be investing. I only ever wanted to buy when things was going down and there was bad talk and no one was talking about it. That really was the way I felt like it was a great way to go, and ultimately it was. But a lot of people, even though they bought low, might not have sold at the highs, because if you can remember back here, or if you're new to the market and you're just coming in, up here all the talk about Ethereum was that it's definitely going to 10,000, and from a $700 buy down here, you'd think, well, that's great, I'm gonna make loads of profit really easily. But ultimately, I can't remember how high we went, but I sold around these areas. So I didn't sell the top, but I think Ethereum was around $4,000. So a nice return on investment, and that really was a great time to get out in the long grand scheme of things. But in that meantime, the emotions I felt was Ethereum carried on. I think it even went up another $1,000 or $1,500. I thought, I've made a mistake. But a bad thing then would have been for me to buy back in and think that 10,000 was still on the cards, because if you have a look at Ethereum, we never actually got to 10,000. So the profit taking strategy that I implemented here, credit to a couple of people that I follow, I'll link them in the description anyway, or even give them a bit of shout out at the end of this. Profit taking strategy here was great, and same with XRP. I think I didn't sell the top. I think I was taking profit around £1 for me, I think, which is about, at that time, might have been $1.20, something like that. That's when most of the profit was taken for myself. And like I say, I didn't buy the bottoms and I didn't buy the tops, because you're never really going to be able to do that. It's just physically impossible, and or it's just lucky really if you're going to be able to buy the bottom and sell the top. It's impossible. You're not going to be able to do it, and I'd get that idea out of your head straight away. If you think you're going to be able to buy the bottom of Bitcoin and sell the top, it's not happening. But what you can do in the meantime is make good profit by dollar cost averaging in low, and then dollar cost averaging out of the market high. So I'll get into a bit of profit taking strategies, some strategies that you can implement, some that I've implemented myself. But yeah, let's get into the next part of this this psychological analysis. So let's talk about profit taking, because ultimately at the end of the day, profit taking in every single market around the world. It doesn't matter what market you're in, crypto, stocks, it doesn't matter. Profit taking is going to be key, and it's going to be the key to sort of keeping you cool during future price movements. So, for example, when I was talking about Ethereum and I was buying down at $700, my strategy then was for when Ethereum got to 2000, I was going to take back my initial investment so that I would never be able to lose anything again. And the same for XRP. I think I took back my initial investment at around 50p from 15 cents. So good profits and good initial investment taken back. So then in the future, any more price movements up, it was simply a bonus basically, and I had percentages mapped out at each different point. So for example, on the Bitcoin chart here, percentages mapped out that I would take profits at each different level. So that's called a dollar cost average out of the market. And that for me is a really, really good way to exit the market, because you're always leaving a little bit in the market just to benefit from any more upside. But you're taking back your initial investment, you're taking profit, you're taking more profit, and then ultimately when the collapse does happen, because it always comes, the collapse always comes when everyone gets a bit too hyped up, you can benefit from it again, and you can start accumulating dollar cost averaging on the way down, and then do the same on the way up again. And as you can see now in Bitcoin, for example, we've had a massive drawdown, and all the people that have bought up here and didn't use sort of like a profit taking strategy, they wasn't buying low, they was only buying high. They're probably going to be a bit too scared now to enter the market and dollar cost averaging on the way down. No matter how low we go, they're probably not going to do it. They're just going to call crypto a scam, and they're never going to be able to be there for the next ride up, the next big bull run that we get. So ultimately, the dollar cost average out the market, having your targets set there, percentages at each point, is going to be the key, and you're then going to be able to have cash on hand for any future price movement down like we've got in Bitcoin now. But again, you're going to leave some in the market to benefit from any more upside. So it's win-win. You're playing both sides of the market, and you don't have to choose a side. You don't have to be a bull or a bear, because to be honest, being a bull or a bear in the market is a trap. You don't have to pick any of them. You can play both sides. You can try and invest low, take profits on the way up. That's not being a bear, and it's not being a bull. It's simply managing your risk and being able to keep a psychological cool head in the market, and it keeps you in the game. And really the key to playing the market cycles is staying in the game, having cash on hand, taking back your investment as soon as possible, taking profits on the way up, and dollar cost averaging on the way down. And I mean, it doesn't really matter if you start now or you start later. Ultimately, I think if you dollar cost averaging at these levels, you've got your percentages mapped out. I think in the long term you're gonna be okay, and you're gonna have a good ride into the next bull run. So let's get into risk management, because I think right now, after this big drawdown in the market, risks of, there's talks of a recession, a depression. We don't know where the macroeconomics is going to be in the next 2 to 3 years. We have no idea, and we don't know how that's going to affect Bitcoin, the crypto market as a whole. Are the altcoins going to come into their own league? Is the market cap dominance going to drop? Is it going to go up? These are all things that we can speculate on, but we don't actually know. So outlining our risk management right now is going to be key, because ultimately, if you're new and you're wanting to get into the market right now and you're thinking, we've been through a big drawdown, I think now might be a good time to dollar cost average in. I wouldn't disagree with you there, but at the same time, you're going to have to outline what is the point at which you're just going to get out of the market, and you're going to decide, you know what, enough's enough. I'm only going to put in what I can afford to lose. I'll dollar cost average to a certain point or a certain time in the market, and that's going to be it. That's going to be me out of the market, and I don't really care. I think that's probably the best route to go down. You don't want to be putting your life savings into crypto, because look, if you're putting your life savings into crypto at wrong times, look what can happen to them. You're going to end up in big trouble. You don't want to be doing that. So manage your own risk. You want to be only putting in what you can afford to lose. And I know that's easy to say, because everyone's risk tolerance is a little bit different. I know I've got a higher risk tolerance because of different circumstances, my age, and different circumstances. Everyone's different, so risk management is going to be different for everyone. But yeah, you don't want to be putting in something that you can't afford to lose. You want to have a point set at which you're going to say, you know what, this is it. I'm not going to be involved in the market anymore, because we don't have to go up. We don't have to go up again. We could just go down, and that could be the death to crypto. That's the experiment over, and central bank digital currencies are implemented, and that's the new digital era. And that could be a scenario that plays out. So at what point are you going to say, yep, that's it, and how much are you willing to lose? Really, that's what risk management comes down to. And when are you going to take profit? Because taking profit is also risk management, as I explained before. At what points, if you're buying down here, when we get to 40,000, if we get there again, are you going to take a certain percentage? Are you going to take a certain percentage at 30, at 20? These are all things that you need to plan out well beforehand, just so you've got a plan in place and it's ready to go. And you've got a plan for everything, down or up. And that way, there's no surprises come to you that way in the market, because these people that bought up here, they got a massive surprise and they're in massive drawdown. And to be honest, they've probably quit crypto there. If you've bought up here and you're still in the market down here, fair play. But most people will have quit from up there, and now the whales, I'm sure they're looking at these areas now and thinking, it's nearly time to accumulate if they're not already. So yeah, that's risk management. It's the herd mentality in the market. You will hear a lot about herd mentality and having to do the opposite to the majority, and there is some nuance to that, because ultimately, when you're in the market and it's going up here and everyone's bullish, you often will continue up to a certain extent. And when everyone's bearish down here, you will continue to a certain extent. And you will be right at some points, following the herd mentality, what everyone else is doing. But there is a point in the chart or in the market where herd mentality is just completely wrong, and 90% of people are calling for one thing. And at that point is when the opposite will probably happen. And when I'm analysing the market at the minute, up here was pure head mentality, and it was 100, 200, $300,000 Bitcoins come in. And that was quite easy to spot, especially on the weekly to monthly time frame candles, where it was just extending every single time. That was quite an easy one to spot, if you had a bit of experience, to be honest. Right now, I'm seeing a lot of head mentality to the downside, and that's why I've started dollar cost averaging into the crypto market. Not necessarily Bitcoin itself, but into the crypto market. I won't go into detail of to what I've been buying or whatever. I'll maybe do that in the future at some point. But yeah, I'm seeing a lot of head mentality at the minute, calling for some crazy numbers for Bitcoin, and everyone seems to be getting on board with that idea and just accepting that that's going to happen. Just like up here, when everyone was talking about 100,000 and 90% of people was saying, yep, that's exactly what's going to happen. The plan B model is going to play out, and all's good, and there was no talk of inflation or anything like that up here, or everything was good. Everyone thought continuing up, and at that point, that's when head mentality is wrong, and you have to make a bit of a change. And there's some good people in the space up here. I know the blockchain backer was great for outlining the top here, and even this top here for Bitcoin. He's a real influencer man. I've been watching him since I got into the crypto market myself. He's been a great guy. Even Torre, I don't know if anyone follows Innovation Markets on Twitter or even goes to the website and has a look at their stuff that they're doing. Torre's great, Benny's great. Have a look at them. They're two people that I would outline to have a look at, especially when having a look at market psychology. They always seem to be doing the opposite of what's going on. And when I was getting to the market and I was following these guys, I was taking their advice, and maybe I wish when I got into the market I would take their advice a little bit more. But again, I was quite new down here, so even just a little bit of their advice was enough to save me and take some profits and be able to be in the market still, and have that cash on hand to be able to reinvest lower. And now as we get lower, these exciting times are coming in. Everyone's scared, everyone's calling for lower, and that's why I think this is an inflection point in the chart where another key point is going to happen again. Look at what happened up here. I think we're just going to get exactly the same down here. No matter how many more spikes down we get, I think we're entering an accumulation range, and that's just me personally. And I think it's a great time to sort of go opposite to what the herd is thinking basically. So to round up, I thought I would talk about time, because when in the market, if you have a look at these previous examples on Bitcoin, the amount of time that you have to spend down here before the little bit of excitement that you get is unbelievable. That's nearly 10 times as long down here, 980 days of accumulation that you have to spend in the market and accumulate yourself and going through the emotions of fear and excitement, and how many times you're going to get in and out of the market. It's gonna mess up a lot of people mentally, and a lot of traders who are trying to catch every single move up and down. So time is key, and time in the market is probably going to give you a lot more experience. But you can see here 980 days of pure boredom before 100 days of bull run, and that's what you get. You get 980 days of pure fear and pure just pure boredom down here, and then you get 100 days of excitement, and then you have to sell. You have to go through all of that time just for 100 days and then sell. And that's what people can't come to terms with and comprehend, that you spend most of the time in this market is boredom and fear, and then when the euphoria comes around, you've got to be quick to act. You're maybe going to get half a year of it max of pure excitement. That's it. That's all you get. But when people go through this process of having all that boredom and all that fear and then get that little bit of excitement up here, they don't want it to stop. So time's key, recognizing that you're going to spend most of this time in the market bored and fearful. If you're here every single day in this market, you're going to spend most of it in fear and bored, and you're going to get maybe 100 days of excitement at the end of it, and at that point you've got to sell. It's hard to come to terms with, but that's what you've got to do. And when it comes down to it, have you got the psychology for it? Are you prepared for it? Are you going to use dollar cost average in and out? Are you going to stick to your plan? Are you going to let it all go and go with the herd? These are all things that you have to ask yourself before the next market cycle comes around. And these are things that I'm preparing for myself now as we come down into these areas in the market, preparing for the future and preparing for the worst. But again, it's not financial advice, guys. I hope you enjoyed this different style of video, just talking about the psychology of the market. If you've got any questions, hit me up on Twitter. I'll put it in my description below. If you do want any if you do want any questions answering, let me know on there or drop a comment. Happy to help. But yeah, don't forget to like, comment, subscribe. That really helps, guys. See you next time.